I want to welcome to the show Dan Ives of Wedbush Securities. Dan, always good to see you. Lots to get to this morning. And I want your thoughts on what Disney said yesterday. Disney said that subscriptions for its Disney Plus, which is its new video service, has now hit 50 million or surpassed 50 million. I mean, it doubled in just about 6 weeks. Where does this leave other streaming services, especially Apple service, which is fairly new?
Yeah, I mean, look, that was a jaw-dropping number, 50 million, double from where they came out in early February. I think it just speaks to the content and the pricing. I mean, it's the magic formula. It's really Iger's brainchild in terms of what's come out. It's firing out of the gates. And I think fundamentally it does pose not just a threat to Netflix, but when you look at Peacock, HBO, and of course Apple, there's a competing sort of mind share for just a dynamic that, of course, no one ever envisioned. With consumers in a lockdown, streaming services and subs and viewership were up 25%. So this is the opportunity. And that's why Apple, they continue to have the strong demand, but content's lacking.
Dan, I don't know if I should be calling you Mr. Ives. I see you're getting an ETF named after you using your last name. Congrats on that. That's some cool stuff. But just wanted to continue on what you just said on Apple. The read through, at least to me, Disney racked up 50 million subs. That's a huge number. What are the numbers looking like for Apple on its streaming initiatives?
Yeah, and right now, and remember, those are paid subs for Disney, whereas Apple, because of the promotional, in terms of a lot of those are free, we think it's somewhere between 30 to 40 million, but a fraction of those are paid. So for Apple, the key is going to be how do you keep those subs after a year for paying? That's why it's going to be content. And we continue to think they're going to be forced into doing more content acquisitions or potentially a studio acquisition. Also remember, any new project can't be rolled out right now. They can't be taped because of the pandemic. That further just stems original content, which is a major issue for them.
I want to stick with Apple for a minute, Dan, because they're supposed to be releasing that low budget iPhone, in the next few weeks. Is this a smart time to be doing it during this pandemic?
Yeah, look, I think it's been a quagmire for Apple in terms of what they should do here. I do view it as a low touch, low fanfare type of release. It's an entry level model. We call it an SE2 or iPhone 9. So I think they'll release it. In my opinion, you're still talking maybe 20, 25 million units. The bigger issue for them is 5G, because those 5G phones, do they release them September, October? We think exactly at that point, just given what we're seeing in the pandemic, post even lockdown, that they'll push that out to probably holiday season, because they cannot release that into a tempered environment. You get one shot at releasing a 5G phone.
Dan, I've been following your Tesla notes, and to me, it seems as though you're staying hopeful on Tesla this year and into next year, but more short term. We saw this week they're starting to furlough their workers. Do you think they're looking at or nearing a potential either an equity raise or a debt raise, and how would the market respond to that?
Yeah, and I think the smartest move the board and Musk made was raising capital when they could. I mean, they've raised, cumulatively, if you think about 2.5 billion tranches, the $5 billion now really takes any capital raise in the near term off table, because liquidity-wise, they're in a good position. I think Tesla, it's a tale of two cities. The next quarter or two are just going to be nightmarish, given you got Fremont shut down, a consumer lockdown. So you're not really going to see that sort of trajectory. And I think just put numbers around, they call it 540K units for the year. Now the whisper somewhere between 4 to 415K. But it's all about, very similar to Apple, it's the other side, the dark valley. What are names you want to own on the other side? I can just tell you, investors I talk with every day, they're focused on when the normalized environment, what valuations look like, especially when you look into 2021. That's what a lot of these stocks are being valued on.
And we know, Dan, you like cloud-based stocks. Your new ETF named Ives is all about cloud. You call Microsoft the Rock of Gibraltar of cloud stocks to own right now. Why?
Look, and it speaks to, even with the ETF, with Wedbush and ETFMG, it was really, the focus was $1 trillion of spending, and to come up with a vehicle that goes after that. And when you look at what Microsoft's done, I mean, Microsoft more and more, even what we're seeing today, it's an acceleration of that cloud trend. That's why that stock continues to hold up well, because you look at areas that are stress tested, they're still seeing spending, it's cloud.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.